Actually, that progress is faster than what we had told you all. We had said that we would bring retail to wholesale ratio two-thirds, one-third. And we were going to do that in about by 26, FY26, FY27. I think we will do it much faster than that because, as you can say, the retail is growing pretty rapidly. This quarter, compared to the same quarter last year, we have grown our retail by 57%, and the trend continues for growing our retail. At the same time, we have aggressively brought down our wholesale, and we are going to continue to do that. And therefore, by the end of the year, you will find that this ratio, which is today already at the end of the first quarter at 55% retail and 45% wholesale, should become better, more retail and less wholesale.
Right. Sir, how's the condition of the balance sheet right now, especially after selling the Shriram Finance stake, 4,800 crore proceeds coming in? How are you going to use it? Will it be used for growth capital of the retail book?
So the balance sheet actually is very strong. Before, as you know, we have announced a buyback of at the 25% premium to the closing date of the buyback, when the buyback announcement was made. And for that, before that, our debt equity ratio was only 1.1 or 1.2, sorry. Now it will get to about 1.3 times debt equity. So it's a very strong balance sheet, adequate capital to grow for the next 4 or 5 years, even if we grow at 20% plus year on year.
So what is the plan going forward? Are you also looking at, with this kind of a strong balance sheet and tailwind in the industry and all your efforts coming to force, looking at some inorganic opportunities as well, or not yet?
So we are looking at inorganic opportunities. As you know, we had done the DHFL acquisition, which was a large inorganic opportunity, which was about 2 years ago. Now it will be 2 years in September. And we will continue to look at inorganic activities, provided that it fits in with our strategy. There's some value that we can see in the acquisition, and it is at the right price. So combination of all this, we do look at it.
Okay. So also talk to us about the thinking behind the buyback which you have announced. What is the strategic actually utility of this buyback, improvement of numbers, etc.? What was the thinking behind it?
So the thinking behind it was that really we had excess capital because of the Shriram shares that we sold. As you said in the beginning, we got 4,800 crores. And our debt equity ratio was actually was pretty strong at 1.2. You know that any financial services company, especially one where retail is so high, the debt equity ratios are really much higher than this. And we thought that we should reward shareholders. They've gone through a difficult time in the last few years. Our company has gone through some challenges. So this was the time to reward them. And at this also, I want to just highlight that in this buyback, the promoters have not subscribed to it, because we have said that we will not subscribe to it. The only reason being that we felt that the other shareholders, non-promoter shareholders, should get a larger pie of the buyback that we've announced. And therefore, I thought it is a shareholder-friendly gesture that we have done.
Yes, I did take note of that shareholders, the promoters actually not participating in this buyback. It's just the minority shareholders and other shareholders you're aiming this benefit for. So one last word I want to understand, 57% retail book growth. Where is this coming from? And what are the levers you're pressing to achieve this? If you could break it down a little more granularly, that, where is this kind of a solid growth coming in? What would be the right growth on a sustainable basis in next few quarters?
So the reason why this growth is coming is that, after our DHFL acquisition, we've made significant investments in the retail story. One is that we have added branches. So today we have 425 branches. We've added significant number of people on the field as well. And we've made significant investments in technology. So a combination of all this is helping us grow the book. and we are also growing mainly in the tier 2, tier 3 cities and the semi-urban cities. So this is the place where usually banks and all are not as entrenched as they are in the urban areas. So it's a combination of this. We are the areas that we are now servicing are the affordable housing. We are doing LAP, we are doing MSME, we are doing some unsecured. So combination of all this has meant that our growth is good, and we are hopeful that growth will continue in this year as well.